Good morning, good afternoon, good evening. Second week of August. Let me tell y'all something. Let's come a little bit closer. Come close. Come close. I know y'all probably like, I don't see her neck. Come close. For those of y'all that are just now tuning in to week 2, I want to tell y'all today is a special day. Why? Because 20 years ago today, on August the 14th, I married my husband. Yes, y'all. We still together. We still like each other. We still look at each other. We still working together. We ain't killed each other. We do have business entities that we work in together. We strategize together. He pushes me as an entrepreneur. I push him as an entrepreneur, and I am so blessed to be able in this second week of August to be able to tell him, EB, I love you. I appreciate you. Thanks for riding with me. Thanks for cheering me on. Thanks for being my provider, my support, my encourager when I want to quit. And hopefully you feel the same way about me. Thank you for our beautiful family. Thank you for this beautiful ride. It doesn't feel like 20 years, y'all. Like, you know what I'm saying? We can look at each other, giggle, laugh, and keep it pushing and have a whole conversation without saying any words. So I'm grateful that we are not just husband and wife. We are not just business partners in certain entities and certain business ventures, but that we are friends. And so for that, I am most grateful that we are friends, that we can be vulnerable in front of each other, and that we can hold each other down when it feels like nobody else is cheering or rooting us on. All right, so enough of the lovey-dovey. Black love, black love, black love, black love, right? Let me back it up and let's get into these business entities. This week, I promised you, we're going back to the IRS page, y'all, because we got to go back to the criteria. We're going back to the IRS page and we are digging in and getting their definitions of each of these business entities. I'm going to do it a little bit differently, right? So I'm going to click on the LLC and then I'm going to back out and I'm going to come back to the sole proprietorship, the partnership, the corporation, the S corp. I'm gonna do S corporation, then C corporation, and then we're gonna wrap it up so I can explain to you why a good old LLC, the chameleon, does what she does. Okay, excuse me. All right, so let's dig into it. Let's get into it so y'all can see it. All right, so I told y'all we're gonna start with LLC. Let's click this link. Let's see where it takes us to. Boop, right? So the IRS says a limited liability company is a business structure allowed by state statute. We talked about that last week. Each state may use different regulations. You should check with your state if you are interested in starting a limited liability company. This is why I told you we're going to use the examples of looking at a couple of states in the next couple of weeks to kind of put that in perspective so you can see what needs to be done. Owners of LLCs are called members. Most states do not restrict the ownership. So members, this is key, members can be individuals, they can be corporations, or they can be another LLC. They can even be a foreign entity. There is no max. And when they talk about there's no maximum number of members, this is going to be crucial when we go back to some of those other entities. Most states also permit single members LLCs. Most of us out here, so you can see my face, right? Most of us out here, when we first start out in these streets, my bad, y'all. I'm on the wrong page. Most of us out here, when we first start out here, are single member LLCs. And you're like, but it's just me. And it's an asset protection vehicle. That's really what it is for, okay? And there's nothing wrong with being a single member LLC. We'll talk about how they get taxed momentarily, all right? A few types of businesses generally cannot be LLCs. Banks, insurance companies, they cannot be because they got to follow certain regulations, right? Check your state's requirements and federal tax regulations for who can be and who can't be, all right? We talk about when we got to make the election, classifications made by, depending on elections made by the LLC, the number of members. I'm going to get right into it, right? The IRS will treat an LLC as either a corporation, a partnership, or as part of the LLC's owner's tax return, that's your individual tax return, disregarded entity, aka you functioning like you are a sole prop, okay? Specifically, a domestic LLC with at least 2 members by default is classified as a partnership for tax purposes, unless it files Form 8832 to be taxed as something else. For income tax purposes, an LLC with only one member is treated as a disregarded entity, separate from its owners, unless it elects to be taxed as something else. Right? Y'all see that word elect? It's an election to be taxed as something else. Okay? However, for purposes of employment tax and certain excess taxes, an LLC with only one member is still considered a separate entity. All right, so that's that. Ask me more questions. Do a consult. My bad, y'all. Do a consult if you need something else. I told you, now we're going to go to sole props. All right, sole props. Sole proprietorship is someone who owns an unincorporated business by themselves. If you are the sole member of a domestic LLC and elect to be treated as an LLC, and elect to treat your LLC as a corporation, you are not a sole proprietorship. But you're going to see my face for this because I need y'all to understand. But you got to make the election using the correct forms. Otherwise, by default, a single member LLC is what? A disregarded entity, and you a sole prop, right? Income tax return you fill out, a 1040. Right? This is what you're responsible for. You're responsible for a 1040 and a Schedule C, which is part of your 1040. It's not a separate form. It's part of this tax return. In most cases, I'm going to say when y'all are starting out, 85 to 90% of y'all, this is what y'all are. That LLC gives you asset protection at the state level. Federal, when you file taxes, you file it as a sole prop, and this is what we out here in these streets doing. Okay? 1040 Schedule C. You got self-employment tax for this, meaning you got to pay estimated taxes on any profits. That's a whole nother story for a whole nother month, for a whole nother day. We talking business entities. All right. You got Social Security taxes. If you got people on payrolls, W-2s, etc. We'll make sure you'll get these links. We'll make sure you get the links. All right. Because we're here to educate. I told you partnerships. We already talked about them partnerships, right? A partnership is the relationship between two or more people to do trade or business. Each person contributes money, property, labor, or skill and shares in the profits and losses of the business. Y'all need a partnership agreement when you do that, okay? There's a whole publication set aside for partnerships. A partnership must file an annual information return to report the income, but it does not pay income tax. Instead, it passes through profits or losses to each of the individual partners. Each partner reports their share of the partnership's income or loss on their 1040, on their personal tax return. Y'all can't see my faces, right? Y'all cannot see my face, and thank God y'all can't. All right? Partners are not employees. Y'all see that? They're not employees and should not be issued a W-2. Each partner gets a K-1. Y'all seeing this from the source, not from me. Partners fill out a separate return, that pass-through entity, a 1065. All right? 2 or more members, separate tax return. I'm going to go to an S corp before I go to a corporation. Why? Because everybody on these internet streets hearing about S corps. S corps are corporations that elect to pass corporate income tax losses. Let's say that again. S corporations are corporations that elect to pass corporate income losses, deductions, and credits to their shareholders. Right? Shareholders of S corporations report the flow through on their personal taxes. So let me break it down a different way. Right? S corporation is the best of both worlds. It has certain rules that it follows from a corporation, but then it gets the pass-through entity benefits of a partnership. So just like the S corporation at the federal level does not pay its own taxes, just like a partnership, but each partner or each shareholder in an S corporation gets a K-1, the same thing is happening. At the state level, that's different, because at the state level, it can either elect to pass through, depending on the state, or it can actually pay its own tax. Okay? Whole different real deep detail. We're trying to keep it as short as possible. The thing that you need to remember to remain an S corp, first of all, you're not supposed to be commingling in any of these entities. You have to be a domestic corporation, have only allowable shareholders, individuals, trust, and estates. They can't be a partnership. It can't be a corporation. You can't have non-resident aliens as your shareholders, right? You can't have no more than 100 shareholders. If you got 101 and you got more than one class of stock, guess what, baby? You're a corporation, but you're not an S corp because you cannot be. And the way we make this election is on Form 2553. We elect to be taxed or operate as a small business corporation. That's what that S stands for, small business corporation. Okay? Separate tax return, that's what we do. And then finally, C Corps, my big daddy corp. Forming a corporation. The profit of a corporation, essentially, the corporation functions like its own entity. A corporation can take special deductions. It pays its own tax. We do have that conversation about double taxation because a corporation can issue dividends, and then you got each shareholder is taxed on the dividends. It conducts business, realizes income or losses, pays taxes, and distributes profits to shareholders. It functions like an individual would function. The profit of a corporation is taxed to the corporation when earned, and then it's taxed to shareholders when distributed as dividends. If we do distribute dividends, because some years you might distribute dividends and other years you may not distribute dividends. Think some of your bigger companies out here for the longest time, Amazon didn't give out, didn't give out dividends, right? But I think Pepsi and Coca-Cola and them issue dividends. I'm trying to think of companies that do issue dividends, okay? Shareholders cannot deduct any loss of the corporation. Why? Because the corporation is getting all its benefits. And currently, C corporations are being taxed at 21%. It pays its own taxes. It's its own entity. It does its own thing. All right? So, we just went through high level, and I kept you a little bit longer, right? Because I gave that shout out to my husband, of sole proprietors, partnerships, corporations, S corporations, and LLCs. Hopefully, this puts stuff in a little bit clearer picture for you so you can understand how things move. Yes, this is a longer weekly video, but I appreciate you taking these 12 to 15 minutes to listen to this because I need you to really understand how this functions and flows. I want to show you this one last thing for this week. You see this? For additional information, go to SBA. Choose a business structure. And they go into all this breakout. This is a summary, right? Gives you stuff at a high level. We'll make sure you get this link, right? What the benefits are. And then this is the comparison. Like when you have tables like this helps for you to look at it. We also have a table that we have created that we will be able to share with you all. But I want you to understand, we'll make sure you get these links so you can dive deeper to get the information you need. Hopefully this week's lesson kind of puts it in perspective. You like, I need to take notes. I need to think about this. And this is why you need to take the time to think about what entity you are going to be. I personally love LLCs. Why? Because an LLC can crawl, walk, run with you as your business transforms. So that's personally why I like LLCs. You have some other professionals out here who are like, if you know you want to be a corporation, go and do it. I know that a lot of small business owners, when they first starting out, do not have the discipline to follow corporate formalities. And so we kind of have to guide and coach and encourage you through that. And so I want you to have a good handle at each stage before you jump on out there, because I do not want people piercing corporate veils, putting themselves out there and commingling for no reason. So until next week, when we then dive deeper and kind of go into, well, okay, let's look at it from the state perspective, because you said LLCs are created at the state. Till then, I'm going to holler at you. And I'm going to go enjoy my daggone 20th wedding anniversary. Talk to y'all later. Peace.